The market ends at the day's low with declining stocks far outnumbering the advances. Financials lead by heavyweights, HDFC Bank and ICICI Bank contributing the most to the Nifty's fall. Mid-caps fall in line with frontline indices. Consumer stocks buck the trend.
MSCI's August review sees India's weight in the global standard index rise with 7 inclusions and 1 deletion. But what draws more attention is a weight up for HDFC Bank in 2 tranches and the embargo on Adani stocks being lifted.
Aarti Industries management says they will revisit their EBITDA guidance due to volatility in margin and pressure from China. The stock plummets 15%, while Hindalco reports a good performance with the aluminum and the copper EBITDA beating street estimates, while Hindustan Copper zooms on an impressive quarterly performance.
Hello and welcome to this edition of Markets Forward, your go-to show where we get you all the key data points and gear you up for the next trading session. I'm Nashkar Souza and joining me as always, Sudip Bandyopadhyay. Well, Sudip, it was that sort of a day when I said this a couple of days ago, you got the color right. It was red on the screen today.
Well, I don't think anybody saw it coming because we were quite all right till about the middle of the session. But I think 12 o'clock onwards, things started changing. And then, well, lowest point of the day is where we closed.
Well, that's right. In the next 20 minutes or so, we'll get you all the big news, all the top developments, corporate voices as well, and all the top voices. For the time being, though, let's run you through today's market action. India, after a while, we underperformed because the Indian markets ended virtually at the low point of the day. You had a tinge of green on most Asian markets. Japanese index was shut yesterday. That reopened today. And that, played catch up. So that was up more than 3%. While the European markets as well, when we closed up, well, they as well were higher in trade. So India underperformed. That's because our biggest constituent, HDFC Bank, was dragging in today's trading session. More than 50% of Nifty's losses was on account of HDFC Bank. The NSCI rejig, well, it fell short of expectations on HDFC Bank. So initially, you expected the $3.5 billion to come in one tranche. Now it will be broken up into 2 tranches. And because of that, the street saw it as a bit of a disappointment. And that explains why HDFC Bank was under pressure. Crude as well as suddenly started popping up. Last week it was up 4%, overnight it was up close to 3%. Because those geopolitical issues, they are making traders a little bit nervous, and that's what's weighing on equity markets globally as well. What did well today was the pharma index. You had stocks like Strides, Auto Pharma, both of them were up and about in today's trading session. In a market that was wobbly, that was up between 3 to around 4.5%. And the breadth of the market as well. If you pull up the crisscross lines, at one point of time, we had more number of stocks that were advancing than declining. But as you see, by the time we wound up, 3 stocks were declining for 1 stock that was advancing. So a bit of a weak session, Surbi, but we'll have to attribute it to the big boy. Your top performing stock or the top weighted stock on the index did perform. And that's what weighed on our indices. No,
absolutely. It started with that disappointment from HDFC Bank, but then gradually, the rest of the market kind of started caving in as well. So if you look at broadly in terms of the sectoral rollout, then it's the financial space that was weak, but not just this stock. That's the point that I'm making. A lot of the non-banks as well, stocks like Bajaj Finance, etc., Shriram Finance. So basically, the financials index itself was under pressure. The PSU side of the market was under pressure for the second day running, and that showed up in both PSU banks as well as the overall wider CPSE index. So again, selling on government-owned shares. That was the second sort of hallmark of today's trading action. And a rush towards safety. That's what really played out, because if you see the outliers, then there will be either from the pharma universe or from the FMCG space. So the consumer space, the FMCG index, that is what actually did relatively much better. Pharma kind of flattened out by the end, but the FMCG index was trying to hold on to positive for the better part of the session. Towards the end, the index has ended flat, but as you will see in just a bit from now, some of the stocks that are constituents of that index, they managed a little bit of green. Speaking of stocks, we'll get to that in just a bit. Here's the lineup on the show today. We'll start off with the top movers and shakers with Vivek. Some of the individual names on our radar this afternoon are Aarti Industries, Hindustan Copper and Hindalco. We will tell you all the reasons why these stocks were buzzing, why they were in focus, and then, of course, we get to all the key events to watch out tomorrow. But first up, let's take a look at the individual level stock action. We have Vivek with the latest. Vivek, over to you.
Well, thank you so much for that. It was a day when you had actually had to struggle to find some green on the screen. Even in the broader end of the markets, the advanced decline ratio was very weak. Select stocks, like you mentioned, names from the healthcare space, names from the pharma space, and some consumer durables names actually saw some green. First stock on the radar, Fortis Healthcare up almost 3.5%, cooled off a little bit towards the end of the session. But as far as the mid-100 or the mid-cap index was concerned, it was the top gainer. Blue Star and other stock, very strong set of results, good commentary as well. And these particular stocks continue to outperform in even in a weak market. Aurobindo Pharma, okay set of results, very strong commentary coming in from the management as far as the conference call is concerned. Again, among the top F&O gainers as well today. And Inox Wind, yesterday the stock hit the upper circuit. Today you actually saw some follow-on buying. This was on back of an order cheer that the company actually got in. On the other hand, a whole host of negative stocks. The first stock that you mentioned, of course, was HDFC Bank. There will be an inflow on the back of MSCI-related flows, but the street was disappointed that it's now being divided into two tranches instead of one single tranche. On the back of that, stocks saw quite a bit of unwinding, over 3% down in today's session. Aarti Industries, the management actually withdrew the EBITDA guidance. The street didn't take to it kindly at all. Over 15% lower in this particular name. The entire metal pack today, all of them was under pressure. Tata Steel, SAIL, Vedanta, Hindalco, all these stocks are ending in the red. A significant cut seen over there. Samvardhana Motherson, the company reported its results towards the later half of the trading session. Slightly muted set of numbers, muted commentary as well. Stock ended low by over 2.5%. And Zydus Life, now very interesting case over here. The company actually reported a good set of numbers. The stock also is an entrant into the MSCI index. But despite that, in the last two trading sessions, brokerages believe that valuations are quite high. Stock down almost 10% in the last two trading sessions.
Okay, all right, Vivek, thank you very much for that. Well, let's get to our guests then. We have Sudip Bandyopadhyay joining in from Inditrade Capital and Ruchit Jain of 5paisa.com on the technicals. Ruchit, let me start with you. What did you make of the decline and, what are the important levels to keep in mind looking at this 200-point drop today on the Nifty?
Hi, very good afternoon, Sylvie. Very good afternoon, Nigel. Well, last 1 week, we have witnessed some pullback move from the lower levels. But on last week's Monday, we witnessed that gap down opening where the index formed a support around 23,900. But in this pullback move, the markets have not seen a positive crossovers in the RSI. Secondly, the 50% retracement was placed in the range of 23,450. 24,450 to 24,500. And market was even not able to surpass that zone. So technically, the setup looks bearish since today, we have seen a resumption of the down move, and this down move has been led by a broader market correction, which we have seen in the later half today. Next support for the market would come around that swing low of 24,000, 23,900. And if the index is not able to manage to show any kind of pullback move from that support, then we could see even levels around 23,630, which are the 38.2% retracement of the entire rally that we have seen from elections day result flow. So setup looks bearish until we see the market surpassing the 23,450 mark again. I think we would continue to see some selling pressure. Even in derivative segment, if you look at the positioning, then neither FIS nor client section are forming much long positions. FIS long short ratio have reduced to around 51-52% now, and even client section have long short ratio to just 53%. So I think there is lack of buying interest, which is clearly seen. So until we see resistances getting surpassed, I think markets would continue to trade with a negative bias in the near term.
All right, near-term negative bias. Noted that point. Thanks a lot, Ruchit, for that. We're going to keep coming back to you. For the time being, let's turn our attention to stocks of the day. And first up is Aarti Industries. The stock got clonked today, was down close to around 15% in trade. This after the company decided to revisit their EBITDA guidance due to the ongoing market volatility. Sonal joins us to run us through all those details and what brokerages have to say. Sonal?
Thank you for that. Well, Aarti Industries was one of the first chemical companies to see a sequential recovery after months of losses and pressures that we have been seeing. So Street was of the view that maybe that recovery could continue and the company will be able to meet its targets. But now after their Q1 numbers, they're not very sure whether they'll be able to meet their EBITDA guidance of 1450 to 1700 crore rupees because of a number of reasons. One, they are seeing volatility in margins. Second, there are pricing pressures coming in from China. And that is something which has disappointed the Street. Volume growth, they expect it to continue at 20 to 30% 30% in FY25, but the overall outlook remains a little vague. In terms of their discretionary segment, the dyes and pigments, that is seeing sequential recovery. Agrochemical demand would only come back in second half of FY25, and the Red Sea issues, they continue to impact exports. So they say that some segments could be impacted because of that in FY25. Their debt stands at 3,300 crore rupees. With some of the capex, they could see it rising to around 3,500 to 3,600 crore rupees. As I said, it has come in as a surprise for brokerages as well. For instance, Morgan Stanley has an equal-weight rating. They say that companies expanding into newer portfolio, the energy applications, that is something which is leading to more volatility now versus what we've seen in the past. MK says that they have a buy rating, and yes, it is the fourth consecutive quarter of sequential improvement in EBITDA, but they are still a little disappointed with the guidance, and that's why they've cut the EPS estimates by 11 and 5% for the next 2 financial years. Nuvama, they've gone ahead, they've raised the target price, but that is largely because of rollover to quarter 1 of FY27. They maintain a buy rating. And in terms of Kotak, they say that the company has suspended their EBITDA guidance for FY25. Overall, they have an idea of 25 to 30% CAGR growth in next few years, but that also depends on what volatility we see, what is the pricing pressure, what happens in China. So that's why they are also not very sure of whether this growth will continue going forward.
All right, Sonal, thanks very much for that. Let's discuss this with Sudip Bandyopadhyay. Sudip, like Sonal pointed out, I think the sharp reaction also stemmed from the fact that the market was hoping that the worst is perhaps over for a lot of these large chemical companies, but the commentary was absolutely contrary to that. What do you make of the Aarti Industries sort of impact that we saw? Your own thoughts on the sector and on this stock in particular?
So, in fact, you're absolutely right. Even many of us were hoping and penciling in the fact that the specialty chemicals industry, I think the worst is over. Even Aarti Industries, I think quarter on quarter, they have been improving their performance for the last 2 quarters. I mean, it's still not anything great, but this quarter was good. The results were good. I think, all around improvement we had seen. But of course, the commentary very clearly points out to the fact that the management is not confident of sustaining this growth momentum. There are still a lot of uncertainties. That's what they're trying to point out. I think, knowing Aarti Industries management, they're conservative, and they're trying to kind of, bring that conservatism into their, future forecast. And of course, that did spook the market in a big way, and the stock did fall quite a bit. But having said that, at some level, we still believe that this sector is coming out of a very bad phase, and things will continue to improve here on. Yeah, there may be a little bit of turbulence in one particular quarter here and there, but by and large, the worst is definitely over for this sector, and things will improve from here on as well. I'm not sure whether the next quarter will be great or not, but the fact is, if you take a 1 year plus kind of a time horizon and that kind of a view, this sector is definitely going to improve from here on as well.
Okay, all right, Sudip, got that. Well, let's focus then on the metal space, and I'll want your thoughts on 2 stocks, Hindalco as well as Hindustan Copper. Hindalco is a constituent of the Nifty, so let's run you through the numbers. The numbers look good, actually. Standalone numbers were up by close to 11%. The operating profit was up close to around 75%. And the key reason out there is that the power and fuel cost has come in lower. We know globally that coal prices have dipped. The e-auction prices as well are lower, and maybe some part of their coal coming from captive sources as well. So you put all that together, the power and fuel cost was lower. Profit number jumped up on the back of a better than expected operational performance. But for Hindalco, as we always say, the segmental performance is important because we're looking at the India business. We already have Novelis's numbers with us. So the aluminium business first out there, a business did much better than what we were working with. It clocked nearly around 3,500 crores if you eliminate some kind of, inter-segment revenues over there. But 3,500, 3,600 rupees of an EBITDA is much better than we were working with. If you calculate the EBITDA per ton, it came at around $1,270 per ton. That's almost up 80% on a year-on-year basis and up close to around $300 on a quarter-to-quarter basis. So very good going on the aluminium business. Moving to the copper business, we have seen that they have been in that vicinity of around 500 to 600 crores for the last few quarters of EBITDA. This time around, it is even better. VAP as a percentage of their mix has gone up. That's clearly contributing because 800 crores in a single quarter, no one on the street was working with that. Both those 2 segments go down as a bit of a beat. On the net debt number, well, it's moved up a little bit. They have capex that's underway. The working capital of Novelis as well got stretched. So that was more or less on anticipated lines. Hindalco goes down as a beat. The stock recovered a little bit from the low point of the day. But because the market sentiment was weak, that's why it ended in the red. Moving to the other one, Hindustan Copper. That's come off from levels of around 400 rupees to around 300 rupees. And these numbers on a year-on-year basis look brilliant. 33% growth on the top line, EBITDA number doubling. The margins as well on a sequential basis were in that vicinity of around 38 to 39%. But on a year-on-year basis, it's up from 25% all the way to around 38%. The key reason is other expenditure as a percentage of the mix. Well, it's come down. It's come down to around 38% from around 47%. And it's up only around 8% when you have a top line growth of 33%. So operating leverage played out there. Profit number as well look quite good. The only problem for commodity related stocks is quarter one, however good it looked, quarter two is going to be softer because the global environment has changed, demand has weakened and pricing as well has weakened. So Hindustan Copper, one more point is that the stock trades at around 100 times its trailing earnings. So earnings has to really pick up big time from here to make that stock on the valuation front give you any kind of comfort. Sudip, what are you making of the metal stocks? Anything you like in them? Some of them reporting good numbers, some not too good. But the bottom line is the second quarter is going to be much weaker than the first quarter. Your take?
No, absolutely right. I think what's happening globally definitely is a bit of a concern for the the metal companies, and Q2 will definitely be softer. But I think one thing we cannot take away the fact is that, Nigel, I think by and large, if you take a slightly longer term view, I think metals are in for good time for considerable period of time. It's not a question of 1 quarter, 2 quarter, but if you take a 7-8 quarters, I think metals will do well. Yes, we have some question marks on China recovery and China metal demand and things like that. But by and large, metals should start doing well because destocking at global level had happened and fresh stocks are being built up. We have seen growth in US kind of stable. So all put together, I think it should continue to do well. As far as specific stocks are concerned, I of course like Vedanta with its presence across the metal spectrum and the demerger which is happening. The valuation wise, I think it's still attractive if somebody takes a 1 year kind of time horizon. Hindalco, of course, with the kind of numbers they have posted and the raw material cost, particularly the fuel cost coming down, I think Hindalco also does look good. Hind Copper, valuation wise, I think it's a bit of a stretch at current levels.
Okay, fair enough. So that's a take on some of the metal stocks where we've seen earnings over the last 24 hours. Ruchit, just to wrap things up, I mean, any other trading ideas considering the market has gone into a bit of a downward slump, at least today? Any ideas either on the long side or the short side for tomorrow, day after?
So I think on the long side, pharma is one space which could continue to do well. We have seen that recently when the markets have corrected from its all-time highs. Pharma is the only sector, and even some FMCG names where price-wise corrections have not been seen. So I think that strength could continue till this uncertainty is there. Sun Pharma within the space looks quite positive. The stock is holding quite strong since last few days. I think that momentum could continue. So if one is looking from a near-term perspective, one can go long on Sun Pharma with stock below 1680 for potential targets around 1840.
Okay. All right, gentlemen, we'll leave it on that note for today. Thank you very much for joining in. Have to take a very quick break, but we'll come back on the other side with all the top corporate voices that we picked up during the course of the day and the events to watch tomorrow.
Welcome back. As always, let's get you all the top corporate voices that joined us during the course of the day. First up, Senco Gold. The management says that the customs duty cut is a great move by the government and the impact on the inventory valuation due to this could be around 50 to around 60 crore rupees. He adds that the boost in volumes will offset the impact of inventory loss. Moving on to sugar companies then. Sugar stocks were in focus. They were buzzing in trade on anticipation of an ethanol price hike as the government looks to take ethanol blending in petrol up to 20% by FY26. We spoke to the management of Balrampur Chini and they say that the sugar industry can supply up to 50 to 55% of the country's blending requirement. The company's CFO also said that inventory levels look fairly comfortable, which is why the industry is hoping for any kind of easing of sugar export curbs in the new sugar year, which will commence from October.
All right, next up, housing and urban infra major Hindalco reported a strong performance in the first quarter. The company expects its loan book to grow at a yearly run rate of 25% over the next 2 years, with the AUM hitting the 1.2 lakh crore rupee mark by the end of the current financial year, that's FY25. Hindalco's CMD Sanjay Kulshrestha says that the cost of funds remains in check and the company will maintain net interest margins between 3.3 to 3.5% this fiscal. On to the two blockbuster listings of the day. Brainbee Solutions, or First Cry as it's better known, had a stellar debut on the bourses. The company listed at a premium of over 40% to the issue price. Earlier in the day, we caught up with First Cry's MD and CEO, Supam Maheshwari. He told us that the company will outpace industry growth of 20 to 25%.
If you look at our past record, we have grown at a CAGR of 20% plus in our India multi-channel. And we should continue to demonstrate going forward, given the industry itself is growing at that. Our international business has been able to improve our profile in terms of the negative EBITDA because just the journey that we have started 2 years back in Saudi. With all of these businesses that we are demonstrating, and our small business on preschool also delivers close to around 18% adjusted EBITDA, close to which was negative in FY23. So with all of these four segments delivering meaningful expansion on bottom line, and we should be able to demonstrate at a consolidated level as well going forward.
Well, another company that listed on the bourses today was Unicommerce eSolutions. The online retail software services provider saw a stellar debut, listing with over 100% premium to its issue price. The promoter and non-executive director, Kunal Bal, told us that they have been growing at a CAGR of around 35% over the last 3 years, and they're quite optimistic on the prospects out there. Let's listen in.
Last 3 years have been good. We've been growing consistently at about 35% CAGR. Obviously the growth is not consistently 35 every year because COVID years were high growth years, and then the growth has started tapering out last year, and we saw obviously a slower year last year in the overall e-commerce shipments. On a going forward basis, we anticipate that the e-commerce shipments in India will grow at about 25% a year on a CAGR basis. And historically, Unicommerce has delivered, an e-commerce market growth plus growth. But we've also been profitable given it's a pure software company. We don't do any operations. We don't, manage warehouses physically. We manage them virtually using our software.
All right, big move on both of those stocks on day one. Before we wrap, let's take a look at all the events to watch tomorrow. Vamakshi, fill us in.
Well, absolutely lots to watch as far as events are concerned. On the global front, we will be watching out for US's CPI number that is expected tomorrow. Apart from that, India will be reporting its wholesale prices tomorrow as well. UK CPI is also expected to come through. We're towards the fag end of the earnings season, and we will be watching out for results of Glenmark Pharma. A couple of defense names as well in focus like HAL as well as Masgao Dogs. They will be reporting their numbers. EID Parry also on our radar on the back of its numbers. Suntech Realty, Ola Electric and Sandstar. These two newly listed players, that is Ola Electric and Sandstar, will be reporting their numbers. So watch out for those counters as well. Lastly, keep an eye out on SpiceJet because Delhi High Court is likely to pass orders on pleas by lessors of SpiceJet seeking pending dues. So on the back of that, keep an eye out on this counter.
Okay, Vamakshi, thanks a lot for that. Well, on that note, though, we'll have to wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side. Thanks a lot for watching.